Hey guys, what's going on? Welcome back to another episode of Millennial Wealth. I am your host, Miguel, and today, guys, we are here to talk about, is it time right now to buy into the stock market, or should you wait until the next crash, recession, correction, however you want to call it? And I'm going to start this video by letting you know, absolutely right now, there's not a single person out there in this planet that knows when the next stock crash is, the next correction, the next recession. There's absolutely nobody out there. And I decided to make this video because I follow a bunch of people on YouTube that do stock market videos. And the hot thing right now is like the next stock crash. When it's going to happen? It's going to happen this year. It's going to happen this week. It's going to happen next week. And everyone is just like doing all sorts of predictions. And I read this one that this one just made me laugh. This guy said that there's a 50% chance that a recession would occur in 2020. Can you imagine any job that you can be like, 50-50 chance and still keep your job and keep like a reputation as a good analyst into the market, guys? But the reality is nobody knows, right? And at some point, it's going to happen. All three of them, guys. If you are a young person, right, even if you're a little bit older, odds are, me, for example, right, I'm in my 30s. By the time I retire, there's probably going to be 2 stock market crashes, 2 recessions, and like 55 corrections, right? So this is not something rare. This is not something unique. This is not a one-time thing, guys. All of these things will happen in your lifetime, in my lifetime. So there's nothing to be scared of. We just need to know and how to understand it and how to act accordingly to them, guys. So I'm gonna start this video by going through very quick definitions of the 3 of them because they're different: recessions, corrections, and market crash. All 3 of those are different, and we're just gonna have like a quick rundown to what they are. And they will most likely do the same. Stock markets goes down, boo-hoo, it will go up. Probably. Don't quote me on that. So a recession is something more countrywide, right? It's not something that it's only happening to the houses. It's not something that only happens to the stock market. It's something that happens to the country as a whole. And the most agreed on definition is when the GDP, the gross domestic product of a country, doesn't grow for 2 consecutive quarters. So basically the economy of a country is not going up, right? And it's fine if for one it kind of stops, halts, but once it does it for 2 quarters, most people would say we are in a recession. And recessions, guys, it's not fun for absolutely nobody. Recessions is when a lot of jobs get cost because everybody's doing bad, right? And it pulls absolutely everything down, even places, even things that are doing great, even companies that are killing it. When recession hits, everyone goes down. But that also happens with both the stock crash and the correction, so we're gonna get to them. Okay, so the second one is gonna be a corrections, guys. Corrections are normal, corrections are natural, and corrections are healthy, right? A correction is usually when either an individual stock, a sector, right, or a specific index drops in value for about 10%. And it's just happens, guys. Sometimes things get a little bit overhyped, overvalued, and a healthy correction, it's needed in order to keep everyone in check, guys. Without corrections, we would have bubbles, right? Because if there was no fail that at any time the market, like the price of anything you have will drop down, then everyone would just, I guess, literally just buy, and then you would just do calls because the price is always going up, right? So corrections are normal. Something like I'm gonna use Tesla here as an example because Tesla is one of the most shorted stocks, meaning that people think the price is gonna drop at any time because they have grown so far. Right now Tesla is trading about $650. So if a correction happens, Tesla could drop like 10% of that, so it could drop to $480, $490. $580, and that'd be fine, right? It's just a correction. That doesn't mean that the stock is determined, like the whole sector. That it's just part of it, guys. And it should be the one that you be the least scared of, but it should be the one that you should be the most prepared for, right? If there's a stock that you really like, you want to get into Microsoft, right? have some cash on the side. When a correction happens, that's when you deploy most of your cash that you had saved for that particular purpose. Because, you know, it's not necessarily that anything bad or terribly bad happened to it. As long as there's no fundamental changes, it's just a great opportunity to buy. And the last one, guys, which is the one that everyone be saying that it's going to happen, that's going to happen this year, next year, that we are due for, it's a stock market crash. Stock market crash is, as it sounds, the whole stock market crashes, and it can happen for a number of reasons, right? Maybe like in case you're watching this video in the future, we are right now in the start of February 2020, and right now the coronavirus is going on. The whole stock market since last week when I did a video dropped about, about $10, guys. So 2-3% in about a week for the S&P 500. That is not great, right? And I'm not saying that right now we're into a stock crash, but it's going down a little bit, right? The whole thing as a whole. If that gets worse, right, then we would have a full-blown stock market, because what happens is people start panicking. Oh my goodness, like this is so bad, like the whole world is going to be so affected by it, and people start panic selling, right? When people panic sell, everything starts going down. I don't think it's going to happen this time, but yeah, stock markets happen fast. You don't know, like they just happened, right? Like this virus, this wasn't a thing 2 weeks ago, and now it's here. Now the whole market's going down about 2%. Maybe this Monday, you know, tomorrow when the market opens in China, then, you know, it may be a full-blown market, and this video, a full-blown market crash, and then this video is gonna age pretty bad. But yeah, stock markets are the least common of the three, I think. But those are the ones that you should be really prepared for. When a stock market crash, that's when you really, really want to start buying companies that are solid. Because when a crash happens, really great companies get pulled down. Something like Microsoft, right? Something like Amazon, something like Google, that are companies that are doing exceedingly great, will get pulled down, and that's when you buy them. Why? Because odds are 2, 3, 4 years down the road, we're gonna recover and everything's gonna be fine. And one thing that I want to hammer in this video is that timing the market, it's impossible, guys. Yes, I mean, every day people sell and buy, right? So of course, if the market crashes tomorrow, there's gonna be someone that sold everything on Friday and he perfectly timed the market. You can probably guess it once, right? You can, if I tell you to guess a number from 1 to 100, think of a number, 55. Some of you thought 55, and I blew your minds right away. That doesn't mean that I am like I'm a magician. That just means that, you know, even a broken clock, it's right twice a day. Timing the market, it's impossible, right? You can maybe see the market's going down a little bit and kind of sell at the start, but it's impossible, guys. So don't try to time the market. Time in the market is more important than timing in the market. Because what happens is the following, right? And I'm gonna use, for example, here 2019, even though it's kind of arbitrary, market went up 30%, right? Let's say that right in January, you were like, oh, the market's gonna crash, I'm gonna get out of the market, right? So you were very, very heavy on cash. And then the stock market went up 30%, right? Then let's say right now there's a crash and it's like a 10% crash. Yeah, I mean, there was a crash and you timed it, right? But you lost 20% profits because you were scared of a 10% decrease. And we've had some really bad stock market crashes. I just don't think in this day and age, I don't think we'll see another 80-90% of the stock market crash, because there's too much people in it right now. And if the stock market were to drop like 20% in a day, people will just pour all their money in it. But you know, maybe I'm just too young and maybe I don't know what I'm talking about. I guess that would be what I would do, right? I have my cash reserved, that if I saw stocks that I love, something like a Microsoft that I'm gonna own until I die, dropping 20%, I would dunk all my money into Microsoft. If Microsoft dropped 20% tomorrow and there was no fundamental change, right? It's not like they say now, oh, we're not going to sell Windows anymore. Now we're only going to sell, like, I don't know, drinks. If there's no fundamental change, that's when you want to drop all your money. So now I have 6 common indicators, guys. I researched a few articles this morning, like what are the best indicators that the stock market is gonna crash? Because this is what every person write an article with the scientific proof. They're 50% sure that's gonna happen, but this is the proof of why. Number 1 is the yield curve, guys. In case you guys don't know, you can buy like treasury bonds right now, and the yield curve, it's when the 10-year treasury bonds yield less than the 3 or 6 month treasury bonds, right? That shouldn't happen, because the longer the term of a bond, the better yield it should have. So when long-term bonds are yielding less than short-term bonds, it's because, everyone's moving into bonds because there's a crash happening. That's number 1. Number 2 is the stock market GDP, the gross domestic product. Like how are we doing? Are we still producing a lot of stuff? Are we not? That's a second indicator. Number 3 is the price to earnings, or the PE ratio. Is the market too expensive right now? And I would say, as of right now, February 1st, 2020, the market is overvalued. There's very, very little deals out there, especially the S&P 500. I think the PE ratio right now is about 25, which is up there, guys. Usually I like it around 15, 16, 20, 25 is too high, guys. Most of the stocks are overvalued right now. Number 4, hitting the like button, guys. Not liking this video right now will in fact cause a stock market crash. Do yourself a favor, like this video, turn the bell on, subscribe, all of those. Share it with your mom, grandma, aunt, granddaughter. Number 4, which is the corporate debt levels. Interest rates are very low, so companies are taking a metric ton amount of loans. The more I read this, the worse this video is getting. Now I'm convinced that the crash is happening this week. Holy crap. Number 5, I'm reading, by the way, it's the housing market. How's the housing market doing? Doing pretty bad as well. Unemployment, how's the unemployment doing? Right now we have really low unemployment, really big, really hot housing market, a lot of corporate debt because dude, I'm making this video for you all, and now I'm like, holy crap, yeah, we're about to crash. I'm not concerned about the crash. I'm not concerned of the crash, right? I've been doing this for 12, 13 years now. And 2008 was like a little market crash, I guess, because if you want to see it that way. My strategy, it's irrelevant. I'm not going to retire for the next 30 years. All the money that I invest now, I don't need. I have my saving money in case I get fired, so I can keep my expenses going until I find a new job or until something happens. So if the stock market were to crash today, next year, in 2 years, it's irrelevant to me because I don't need that money for 30 years. So as long as you guys are fine with that, as long as you guys are not gonna panic sell, a crash, a correction, or a recession shouldn't impact you all, right? That's why it's so important, guys, that you have all that cash on the side. That's so important that you guys don't have debt. That's little debt as you guys, I guess, can. So then what can you do to prevent, right? What can you do if you think a crash is happening, a crash is impending? 2 options that I have written down here. The first one is going to be dollar cost average, right? I buy every 2 weeks. I get paid, I invest into my 401k, I buy more stocks, I buy more this. I'm not saving a lot of money and dropping it at once, right? Let's say that right now you have $50,000 savings. Like, well, I think the market's gonna crash, so I'm gonna be deploying a little bit of that money every single week. That's smart, as long as it doesn't take you forever, right? Because if you have $50,000 and let's say, I'm gonna invest $1,000 every week, that's gonna take you a year, guys, and that's a whole year that you're potentially missing on earnings, right? A year that you're possibly losing earnings, but it also goes the same way. You probably saved some losses. So cost averaging is great as long as you don't overdo it, right? I cost average a lot. I don't save, now I have $20,000, I'm gonna start buying. I buy every 2 weeks. And consistency, guys, one more time, time in the market is more important than time in the market, and that has forever been true. And one thing to remember is that past performance will not indicate future performance, right? But it's the best thing we have. The best thing we have is, we have crashes, we had recessions, we had corrections, and 100%. they always recover, right? Unless right now, unless this coronavirus completely destroyed the stock market, they always come back. They always bounce back. And there's always better years than worst years, guys. And every time, like if you take 5 years intervals in the stock market, 98% of the times in 5 years intervals, you were going to be higher than when you started at any given time, any 5-year segment. So only 3%, 2-3% of those you wouldn't. However, 3 years a lot less. You got like a 66%. So that's why it's so important. Anything you're investing right now, I don't need it for 5 to 10 years. Very important. And now the number 2, guys, it's hedges. And I'm not talking about the green bushes when you go into houses. I'm talking about what can you do to combat that. And there's a few of them. Number 1, and this is one like... This is one of my favorite ones though. Assets, real things. How can you do if the stock market crashes? How can I make sure that I don't lose all of my net worth, right? A lot of people like to buy gold and silver, platinum, palladium, whatever your favorite metal is. You know, you can buy a little bit of it. I'm not saying like 50-50. A lot of portfolios, they have like 5% in gold and silver. Because what happens right now, if you see gold, the price of gold is going up because everyone thinks the stock market is going to crash, right? And this is just, a lot of people always ask me about cryptocurrencies. I own cryptocurrencies, but they're such a small part of my portfolio that I forget I have them. Bitcoin is going up a lot. Why? Because the stock market is getting scary. Stocks market gets scary. Gold, silver, Bitcoin go up. Bonds, another one, guys. Bonds, they're fine. They're just going to yield what they're going to yield. Right now, it's a bad time to get into bonds because they're yielding pretty bad. But if you hold them for the long time, you're going to be fine. Assets such like land, property. I don't know, guys. Pokemon cards. Pokemon cards are super hot since Pokemon Go came out. So I guess if you want to count that. The other thing you can do is you can buy puts. You can put stop losses on your orders, right? If you really think the stock market is going to crash, buying puts, right? It's like buying insurance for your stock. So it will give you 1 or 2 years security if you're okay with paying the premium. Dude, I don't know. I did this video and now I think the market's gonna crash. Guys, I'm not scared. I'm not concerned. If it happens, I'm ready to just keep buying. And I'm not gonna put any more money, you know. I'm just gonna keep buying consistently what I'm doing. And hey, and I know this sounds a little bit weird, right? But if the stock market goes down and your stock picks are solid and fundamentals are there and you're just getting more for your money, so it's not necessarily the end of the world and it's not necessarily the worst. And people that lose money, it's because they sell, right? It says, I think Dave Ramsey has a saying that the only person that get hurt in a roller coaster are those that get off while it's moving. It's the same thing with the stock market, guys. If it's going down and you sell, yes, you lost money. And those are the people that they get really, really sour about the stock market. Those are the people that say, oh, stock market is a scam. Stock market, that's how you lose all your money. When you hear someone saying that, it's because they sold when the stock market was going down. Anyway, guys, that's my opinion. That is my plan. I'm documenting here my life, my investments, guys. Let me know if this is something that, you know, this is your strategy. This is something that you thought about. Don't panic, guys. Don't listen to people like predicting. I've been alive for 30 years and the world was going to end like 5 times by now. We got the Mayans, we got this, we got that. And nothing can happen, and odds are in 50 years we're all gonna be here, and if 50 years we're all not here, then no one's gonna say, haha, you were wrong. So it's a win-win situation. So anyway, guys, thank you all for watching, guys. Make sure you drop five likes to avoid the market crash, guys. Drop 5 likes right now. So anyway, guys, thank you all for watching. I hope everyone's having a fantastic time, a fantastic day, guys, and I'll catch you all later. Bye.